Well, thank you so much for joining us today. Here it is, a Thursday. I'm Marlon Boulding with you, your tour guide to the ag commodities. And considering the fact that it's Thursday, that means we get our weekly export sales numbers from USDA. We did get them a short time ago, and here to help talk about it, I want to welcome aboard the one and only Brian Hoops, President of Midwest Market Solutions. He's in Springfield, Missouri, and always a pleasure to get to visit with you, Brian, about our markets. Now, let's take a look at these numbers that came out just a short time ago. I want to get your take on this and if the market's even going to pay attention to them. Let's look at the numbers. On the corn, we had 279,800 tons that were sold for the old and the new crop. That was a fairly low number when we were getting used to seeing numbers up around 1 million or more. Soybeans, 724,800 tons this time around. Soy meal, 291,900 tons. You know, compared to soybeans, the soy meal was actually fairly strong, I thought. Soy oil, only 6,200 tons, and you had the wheat at 236,900 tons this time around. So given all this talk about the heat impacting the crops and the livestock across the country, is this export sales number really going to matter very much today or not? What do you think?
Well, good morning, Marlon. Probably minimal movement off of this export sales number. Now, the soybeans were a good number. Anytime you get any sales of old crop soybeans, it's going to be viewed as positive because we're already at the pace to meet the USDA forecast. We have 11 weeks to go in the marketing season, so a lot of it's going to get down to shipments of how much a product we're able to send out. Old crop corn was a market near low. New crop soybeans were a very good number. A lot of the private sales, we're not seeing a lot of sales, but what we see is a lot of new crop soybeans. So I thought overall it was kind of constructive for soybeans, a little disappointing for corn and wheat, but it may not matter much. We're focused on weather and that threatening ridge of high pressure and a lot of heat building up into the upper Midwest is what the trade is really looking at. And we've been talking about these, the positive fundamentals for corn for quite some time, possibility of some yield losses because of this heat. And now we're starting to see the technicals match up with that fundamentals. And so now things we can talk about maybe moving to the upside and not just have a trading range. We're closing December corn from a technical standpoint yesterday above a 21-day moving average. That's the first time since about May the 18th. Overnight, we finally cleared the 50-day moving average. And so now that we're above both of those, that may be a signal to some of the speculative traders to start coming back into the corn market. And we did see, prices close at the highest levels in more than a month overnight. So good technical action. The fundamentals are there for higher prices. And now if we can just get some speculative buying interest, I think we can move higher.
Okay, let's look at our overnight trade. Our quotes are provided by bar chart. Let's go to the board and start with the corn market. So this is how we fared when we finished up the Globex trade. You had July corn actually 8 cents higher this morning at 7.82. And you had December corn finishing 11 cents higher this morning at 7.32. Fairly strong action. By the way, I noticed I was watching the radar maps last night, and there was a frontal boundary sweeping through the central corn belt, and it looked like a pretty continuous line until you zoomed in on it. And then when you took a closer look, it just seemed like scattered, isolated cells that went roaring through there. Some areas got good rains, and quite a few areas just got totally missed again. And very intense heat. In fact, it sounds like it could get hotter next week. Soybeans overnight, July was 10 1/4 higher at 17.04 per bushel. November was up 9 3/4 last night. In Chicago, wheat, we go to that July contract, and it was 6 3/4 higher at 10.56 3/4. In the Kansas City market, the harvest is well underway, and you had July gaining 7 cents at 11.40 1/4. Interesting trade here. In the Minneapolis market, spring wheat, July up 6 3/4 at 12.08 per bushel. We'll come back and talk with Brian Hoops about our beef and pork exports, the weather impact here on livestock production, and maybe touch on these outside markets too. Man, there's a lot going on. We'll be right back. Well, as I mentioned, we had export sales numbers for the beef and the pork that came in this morning from USDA. Let's review what we had there. On the beef sales, a total of 17,400 tons. And on the pork side, we had 27,600 tons this time around. I'm scanning across the narrative here, and we had China buying 4,600 tons of beef, and we had China buying 3,800 tons of U.S. pork last week. So even though the numbers weren't all that great, it was nice to see them in there buying on both sides of the ledger. So, Brian, how do you read that?
Yeah, it's pretty routine business, I think, for the beef markets. Pork was up from the last couple of weeks, but again, pretty much a routine kind of in the middle of the range of what we've been seeing over the last several weeks for both beef and pork. So I don't think this is going to have a major impact on the trade. You mentioned heat and some death loss in the cattle market, and you feel bad for the areas of the farmers that have had this drought and the heat that have taken lives of some of their cattle, and they're not insured. They have to not only pay for the cost of the cleanup, but also the loss of the profit potential on these cattle. But it really probably has very little or minimal impact on the overall marketplace. We've seen much stronger cash trade this week, which is a good sign that we're trying to move higher. But the boxes have not really responded, and so we're starting to lose some packer margins, and thus packers starting to slow down their kills a little bit. We're about 9,000 head slower this week than what we were last week as far as chain speeds go, as they try and maintain some margins and keep those boxes propped up. So it's something to be watching here, but we're probably going to see a little follow through in the cattle market, but I certainly think you could see some two-sided trade throughout the trading session, with the stock market being down and the renewed concerns about the economy after the Fed announcement yesterday.
Yeah, as you mentioned, the Fed increased their interest rates by 75 basis points. And boy, I tell you, the Dow does not like that very well. It did rally right after that news came out, but it quickly turned around, and boy, it headed south overnight. June Dow futures down 571 points, barely hanging on to 30,000 now at 30,090. That makes one wonder what's going to happen to the future of demand for beef and pork. We had August live cattle closing yesterday $2.72 higher, and that'll be our starting point today at 136.80. August feeders yesterday were up $1.97 at 173.27. And lean hogs, when we wrapped up yesterday's session, they were higher. August was 77 higher at 104.32. By the way, the nearby July was up $1.65, all the way up at 108.27. So anyway, we'll see how things start here in about 5 minutes from right now. Brian covered a lot of ground. Thanks for the help this morning. Brian Hoops of Midwest Market Solutions. Fasten the seatbelt, Janet. This is going to be a bumpy ride today, I have a feeling. So we're about ready to go.